Hi, this is Samir Machwe and welcome to our channel FINDAS, a place where you can be financially bindas. The year 2020 has been very good for the gold as an asset class. In today's video, we shall answer the question if you should invest in gold in the current year 2021. The spectacular bull run that began in August 2018 in the yellow metal ended in August 2020, and in the recent times gold has been going down in its price. In the last 3 months, gold has given negative returns in the physical form as well as for those who invested in mutual funds or ETFs. If we look at the history, conventionally gold prices rise whenever there is an economic uncertainty across the world. Since the last 2 years, there is a huge amount of uncertainty. First, due to the US-China tension, followed by the COVID-19 pandemic world over. Historically, a major price rise happens in gold only when there is a major crisis that affects the whole world more or less. In 1980, there was an oil crisis in Middle East. The next big crisis came in 2008 when the subprime crisis in the US led to the meltdown of Lehman Brothers and the equity markets across the world fell. The third crisis was the recent COVID-19 pandemic last year. Gold was trading around rupees 30,500 per 10 grams in the month of August 2018. After that, we saw a secular bull run in the gold prices, and the gold prices hit a high of 57,500 in the month of August 2020. After August 2020, gold trend has been downwards. Currently, gold is trading around 50,000 odd rupees per 10 grams, that is about 12 to 13% down from its August high. Internationally, gold traded at a high of $20.75 per ounce on 7th August, and since then it has entered a downward trajectory, currently trading around $1,850 per ounce. After the fear and uncertainty related to the corona pandemic has subsided in the last few months, the gold prices have started falling. Gold funds have given a negative return of around 2 to 3%. Due to this negative returns, the inflow of money in the gold funds has been negatively impacted. The inflows into the gold ETFs have been falling from a high of 907 crores in August 2020 to 430 crores in the month of December 2020. After continuous inflows for 7 months, gold ETFs experienced redemption pressure in the month of November and December 2020 due to the profit booking activity by the investors. Gold prices have corrected from the recent high, and you can see in this chart that I am showing you on the screen right now, gold prices have actually entered a downward channel. Gold witnessed a very good bull run in 2020. If you assume that it will continue in 21, it could be a mistake. Gold prices are likely to come down further or move sideways looking at the technical charts as of now. Now that the COVID-19 vaccine is also here, people across the world have become more confident to deal with this problem. The atmosphere of certainty is bad for gold prices going forward. If you are thinking of investing in gold funds or physical form, think again. This may not be the best time to enter the gold funds. Last year, gold funds have given very good returns. Year 2021 may not be the same. Let me now show you some real returns that gold has generated over the last few years. See the figures on your screen. You will see that a few years gold has given positive returns and it has also given negative returns in some other years. If you did more intricate calculation, you will find that someone who invested say 100 rupees in the year 2013, he would be left with 147 rupees after the recent rally in the gold by end of the year 2020. This means the investment in gold has given the investor an annualized return of around 5% in last 8 years. Now that is not a very high return. If you consider the inflation rate, which is around 7% on an average in the last 8 years, then gold has not generated any real returns for the investor. However, for someone who bought gold in 2018, it gave him very high returns for the last 2 years, that is in excess of 20%. At FINDAS, we have been helping our clients to invest judiciously since the year 1999. We have been privileged to serve these extraordinary people who are very serious and intentional to live an abundant life. If you want to experience the abundance that you really deserve and you want to live the life that you love, please get in touch for a free consultation. I am sharing the details in the description below. Now that most economies are returning to normal, people are becoming confident and consumption is also picking up. Most of the equity markets across the world have been rallying quite a bit after the COVID-19 fall in the month of March 2020. This situation does not augur well for the gold going forward. Most experts believe that gold prices and economic situations have an inverse relationship. When the optimism returns, gold normally heads downwards. In most of the countries, COVID-19 pandemic is in good control and vaccination has already started. This may bring down the gold prices even further and with speed. We do not recommend an overall exposure to gold of more than say 5 to 10% in your portfolio. Gold should normally be treated as a hedge to protect against the bad times in stock markets rather than an investment product. The only thing that would drive up the gold prices could be another wave of COVID-19, which looks highly unlikely at this point of time. Also, a very bad economic event may be in favor of gold appreciating in the near term, which could be, of course, anyone's guess. All in all, investing in gold may not be very lucrative option in the current year 2021. In India, the gold prices are determined by 3 factors. First, which is the international price of gold. Second, the US dollar exchange rate with the INR and the government tax on the gold. The international price of gold currently is around $1850. The USD INR rate is around 73 rupees and there are 3 taxes on gold. The import duty is at 10%, the making charges at 5% and GST at 3%. This means that you will have to pay a higher price over and above the international price if you bought gold in India. So if you are planning to buy gold for personal consumption, there is no wrong time to buy it. Just go ahead and buy it. But if you want to invest in gold, this is not the best time. In fact, in my opinion, the best time has actually passed, at least for the short term. If you care about your life and you want to make a meaningful difference in the area of money, I would request you to watch all our videos. Make sure you subscribe to our channel FINDAS. Please do also comment about how you like the content that we discuss here on this channel. If you want us to discuss a particular money related thing, please do mention the same. Take good care of yourself and see you soon. Bye bye and take care.